Look, we've gone with Goldman Sachs. Goldman Sachs is some of the best risk managers in uncertain times like these. They showed that to you in the second quarter. They're resolving the 1MDB situation. That's been a 4-year overhang. So it's gone from a short-term trade to a longer-term investment at Goldman. So it's a relative value for us. Morgan Stanley's positioned just fine, but we had downgraded them after their acquisition announcement of E-Trade. We think that will be a little more tricky than the market had expected. Having said that, they do have a decent business mix for this environment, but that stock's held up. I'd rather go for one of the forgotten banks or the ones that have been beaten down, like a Citi, a JP Morgan, or Bank America.
And Steph, now just bear in mind, Mike can't talk about Wells Fargo, so I know you're a big proponent of that stock. I just want to throw that out there for our viewers so they understand why he's not addressing that since he works for the company. But Steph, you can talk about the others you own.
Well, yeah, and I actually agree with Mike. And Morgan Stanley's up 3% on the year. Bank of America's down 21% on the year. But Bank of America is the most levered to the yield curve, to interest rates, to net interest income and margins. So you really have to believe rates are going a lot higher for them to get the operating leverage. That said, at Bank of America, they've done a great job on cost control, and the stock trades like at 1 times book at this point, and has a 2.6% yield, which is pretty competitive to the others. They used to lag the group. So I do like Bank of America, but I'm going to stay patient because I know what I need to see for that to work. Morgan Stanley, I think, is going to hum along. They had the best second quarter out of the group. E-Trade, I like that deal quite a bit. I think they're going to see a lot more synergies than people expect. And then, of course, Wells Fargo, I know Mike can't talk about it, but it's still down 52% on the year. And I'm a big believer of the CEO and the turnaround story. And they took $8.4 billion in credit reserves last quarter. I think they're being conservative. I think that's the peak for them.
Hey, Mike, what do you make of the Buffett buying binge, if you will, in Bank of America?
Unbelievable. Well, I'll say it again. This is value investor heaven, and you have the most famed value investor of all time not getting enough of Bank of America. You've heard of buyer's remorse when you regret what you bought. I think Warren Buffett has buyer's remorse when he buys Bank of America. He has remorse over not buying enough. 13 separate days of purchases of Bank of America stock. And I think it's a microcosm for the largest banks because you're seeing deposit growth year over year equal to the 5th or 6th largest bank. And you're also seeing the moats around the business for Bank of America and the large banks with digital banking. And those moats are getting deeper and wider. So if you want to own a stock for the next 100 years, Bank of America fits, Warren Buffett's, methodologies very, very well. But we think Bank of America and JP Morgan and Citi and the big banks work over the next 1 year. You don't have to wait 100 years.
Yeah.